Hi, here's a brief study I've done on bonds, which are normally bullish at the beginning of the summer. I've got the 8 and the 21 moving average along with the Ichimoku cloud. And I basically scroll for the past 10 years. You look around June for the crossover. It's below the cloud, so it's probably not going to be a real good trade. And sure enough, it's not. You get in at 116 roughly. It crossed over. You get in right about here, about 116. It crossed back down about right here, so you get out. It's kind of a break even. You don't do much of anything for sitting in this trade for a while. Look for the next trade to set up the next year. Here you're below the cloud once again, but it crossed over about April 16th. You could get in if you want to then at 116.15, and you look. It went above the cloud during the trade, which is good. This is a daily chart. And then finally crossed over at about 124. So you make about 8 points or about $8,000 trade, but that's a pretty lengthy trade. You're in there for quite a long time. It did stay above the cloud, which is a good thing. Next year, around June time period again, you're right in the cloud. You're coming up, it looks like. You don't know that at the time. About the 18th it crossed over. You could get in at 119.24, and it crossed back over right here, even though you're still above the cloud at 123. So you made about $5,000 on that trade. Next one, again, you're below the cloud here again, which is not real good, but you could get in here where it crossed over about April 6th at about 129.30, almost 130, almost about 130. And you crossed down here about 133. That was only a $2,000 trade for a couple months. Is not that good. Next trade we're looking for happened. You look for around June again, looking summer, and here again you're below the cloud again. It didn't happen in June. June was terrible. It was a downtrend. You were below the cloud. The lines never crossed over. The moving averages didn't jive. You want the green moving average to be higher. So here it broke higher finally, but you're still below the cloud, so probably not a real good trade. Next one happens the following year. Basically, you're April 30th. You probably get in around here. You're in the cloud, which makes you feel a little better. But again, you'd be in at 124.13. It crossed over right over here, so you'd be out at about 125.04. So not a real big trade. Maybe a point, not hardly worth it. It's best when it's above the cloud. That's what you really want to watch for. And here I just had a point. It was June. It was the time it should be going up. And again, you see the green is down lower. So it's just not good. And that's the 9 moving average here. Click on it. It's the cancel. The green is the 8 moving average, not the 9-8 moving average. So it's down below. Red, that should be a 21. Yeah, red is 21. So here again, you're watching. It's above the it's in the cloud, breaking up. It looks like you'd probably get in right about here, or if you're going to wait till an open day, the next open June 7th. 130.23. It crosses over right here. 132. You didn't make much at all. Not a very good trade. 2 points maybe, a point and a half. Next one crossed over the 17th of May, above the cloud. 125.18. Crossed back down here. 126.05. Not a very good trade for being in there for, over a month. That's pretty bad. And here's the final trade. This is 2017. You're in the cloud. Line broke. You could get in here at 119.27. It's very flat right now. It's staying above the cloud, but very flat. Not very impressive. So that's my brief study on the 10-year Treasury note. Hope this helped you, gave you some ideas. God bless. Have a good one. If you find anything better, let me know.